Hello to everyone, followers, beloveds of this Patera TV, professional accountant in training and employment relationship associate. It is your asset which you are going to use it in gaining knowledge, skills, and experiences about business courses. I'm your partner, I'm called Benone. So today we are also going to give suggested answer about the written exam for the accountant sector position. So we are going to deal with cash, budget, and break-even point. Dear friend, dear followers, dear brothers of this Patera TV, I'm starting also begging you to subscribe on this YouTube channel, to share, like, comment in order to get new updates about this Patera TV, about today videos we are going to upload sooner. We are going to start by reading our question. This is written test for sectors accountant. Our question implies that as the matter of decentralization, suppose some services that were a matter of a district are decentralized to the sector's level, and you then have the following information to help you produce the upcoming year budget for the sector you are competing for to become an accountant. You are on December 31st, 2014 to prepare the budget for the year 2015 and your budgeting period covers a set of 4 quarters, always starting 1st January. We have the year, we have year 2015 budgeted revenue, and we have quarters, quarter 1, we have quarter 2, we have quarter 3, we have quarter 4. So the budgeted revenue from property tax in quarter 1 is equal to 10 millions, in quarter 2 is equal to 8 millions, in quarter 3 is equal to 12,500,000, in quarter 4 is equal to 8 million. The budgeted revenue from rental tax in quarter 1 is equal to 2 million, in quarter 2 is equal to 2,500,000, in quarter 3 is equal to 3 million, and in quarter 4 is equal to 4 million. The business license tax budgeted revenue in quarter 1 is equal to 12 million, in quarter 2 is equal to 14 million, in quarter 3 is equal to 15 million, and in quarter 4 is equal to 15 million and 500,000. The budgeted revenue from cash from sector, budgeted revenue from cash sector's auditorium hall rate in quarter 1 is equal to 7 million, in quarter 2 is equal to 3,500,000, in quarter 3 is equal to 15 million, in quarter 4 is equal to 11 million. So other services, sector service, the budgeted revenue from other sector service in quarter 1 is equal to 600,000, in quarter 2 is equal to 400,000, in quarter 3 is equal to 550,000, and in quarter 4 is equal to 150,000. Hano baduhaye budgeted revenue zizava muri ubu bwoko bw'imisoro itandukanye. Dufite property tax, dufite rental tax, dufite business license tax, cash from sector auditorium hall rate and other sector services. Izi nizo ziri budgeted. Ibyo baduhaye bi budgeted in 4 quarters. So the sector's policy require all taxpayer to pay 70% before the last date ending the last month of a quarter in which taxes are due, and 30% remaining before 15th of the first month of the following quarter. Whereas other cash from sector service is collected as services are performed. Hano baratubwira ko zino budgeted revenue tubonye hejuru. Budgeted revenue zizava mu birebana n'imisoro. Abashinzwe gusora sector ifite gahunda yo kubasaba ko 70% yayo bagomba gusora muri kwata runaka, wenda ni kwata ya mbere, agomba kwishyurwa ku itariki ya nyuma y'iyo kwata. Bivuze ngo n'ubundi azishyurwa muri iyo kwata. Noneho 30% akishyurwa ku itariki 15 z'ukwezi kwa mbere kwa kwata yindi ikurikiyeho. Ubwo no kuvuga ngo nimba hari amafaranga y'umusoro ateganywa muri kwata ya mbere, 70% byayo bizaza muri kwata ya mbere, 30% bize muri kwata ya kabiri ikurikiyeho. Bakomeza batubwira ko other cash from sector services is collected as the service are performed. Kuvuga ngo zino other sector services izo zizaza zinjira muri kwata n'ubundi izo service zatangiwemo. The auditorium cash rate is collected in 3 installments. The auditorium cash rate is collected in 3 installments. 50% in the quarter by which the hall is rented out. Zino auditorium rate zo bazagenda bazikusanya mu byiciro bitatu. 50% azajya yakirwa igihe bakodesheje iyo sale y'umurenge. 30% azaza yakirwa mu yindi kwata ikurikiraho. Ayandi asigaye nayo ariyo 20% yakirwe mu yindi kwata ikurikiraho. So the 2015 year end receivable include property tax is equal to 102 million, and receivable of rental taxes is equal to 107 million, and business license tax receivable is equal to 5 million. So this is the receivables from different types of taxes. They include as well receivable account from whole rate of 110 million. In 10 million, the 7 million to be collected in the first quarter, and 3 million in the second quarter in the next year. Kuvuga ngo hano dufite receivables ku mafaranga bari bubone bakodesheje sale zingana n'ibihumbi 10. Baratubwira ko miliyoni zingana miliyoni 10. Miliyoni 7 zizakusanywa muri kwata y'umwaka, zikusanywa muri kwata ya mbere y'umwaka ukurikiraho. Naho izi miliyoni 3 zo zikazakusanywa nanone muri kwata ikurikira ya mbere, second quarter. Nuko ngo muri iki kibazo cyacu niba dufite kwata ya mbere dufite kwata ya kabiri. Miliyoni 7 zizakirwa muri kwata ya mbere, miliyoni 3 zakirwa muri kwata ya kabiri. On the other side, the mirror company on the other side, the mirror company that operate on the sector's territory has promised to contribute 28% of its budgeted margin of surfeit sales amount for each quarter. Hano uyu murenge ufitemo company twita mirror company yasezeranije ko izaza itanga 28% bya margin yayo of surfeit sibyo kuri buri quarters. Regardless change that may occur in its sales budget realization as contribution to the sector's development. The amount will be deposited on the sector's bank account, on the first date of the quarter following the quarter of sales include 1st January 2015. Ari amafaranga ariya 28% byayo ya margin of surfeit ira company izaza yabitsa kuri konte y'umurenge, ariko amafaranga ibonye muri kwata ya mbere ira company ibonye muri kwata ya mbere igiye gutanga contribution kuri account y'umurenge azaza ayishyura muri kwata ya kabiri. The mirror companies units sales are budgeted as follows for the year 2015. We have quarter and we have unity sales. This is the quarter 1, quarter 2, quarter 3, quarter 4. And the unit sales in quarter 1 is equal to 9,000, but in quarter 2 is equal to 10,000, and quarter 3 is equal to 4,500, and in quarter 4 is equal to 8,000. For the year 2014, the following data are applicable for the mirror company. Sales price per unit is equal to 1 fra 25, unit variable cost is equal to 1 fra 9, fixed expenses per quarter is equal to 1 fra 30,000. Batwereka ko muri mwaka wa 2014 aya makuru niyo mirror company yakoreshaga. Sales price ya 20 sales price per unit ni 25, unit variable cost ni 9, fixed expense per quarter ni 30. The following changes are expected in 2015 due to the quality improvement that is expected to start with January 1st, 2015. The unit variable will increase by 1 fra 6. Hari impinduka zirimo guteganywa ko zizabaho mu mwaka wa 2015 bitewe nuko bashaka kongera ubwiza bw'ibyo barimo gukora. Baratubwira ko izo mpinduka nuko unit variable cost izava ku 9 igere kuri 15 yiyongeyeho kangahe 6. Moreover, for gaining a good share market, the mirror company is planning to advertise its product to TV, the channel that it has never used before, and the expected advertisement cost will be 1 fra 15,000 per quarter. Hano baratubwira ko nanone iyi mirror company ishaka nanone kongera isoko. Iyi mirror company irimo irategura ko igiye kuzaza yamamaza ibikorwa byayo, product zayo biciye kuri televiziyo. Iyo channel ntabwo bari basanzwe bayikoresha. Mirror company ikaba irimo guteganya ko amafaranga bazatanga bamamaza azaba 15,000 kuri buri quarter. Mwibuke ko ubundi mu mwaka wa 2014 batangaga 30,000 buri quarter, ariko kubera ko bagwi ibikorwa byabo nono ya fixed cost 30 igiye kwiyongera ibihumbi bingahe 15. The unit sales price will remain 1 fra 25 per unit, and 9,500 units have been sold all throughout the 4th quarters 2015. selling price hano ntabwo mu mwaka wa 2015 izahinduka, izaguma ari 25. Gusa hano bakatubwira ko nanone inite 1,500 aribyo byagiye bigurishwa mu mwaka wa 2014 uko kwata zose ari sold all through the fourth quarters. Muri kwata nizo zagurishwe muri kwata ya kane bibiri, muri kwata ya kane 2014. Instructions: prepare the sector's cash collection schedule for the upcoming year 2015, both in quarters and in total for their dear friend, dear followers of this Patera TV. We are going to give suggested the answer for this question. I'm going to beg you, to request you to take your questionnaire which contain this question. By the time I'm giving you the answer, keep your eyes on this video and keep your eyes on your questionnaire. So the answer is this. This is the cash budget section of a cash collection schedule for the upcoming year. So we have balance beginning. So this information given on this additional information, it will help us to gain the contribution of the mirror company to be contributed in the first quarter of the year 2015. So instruction: prepare the sector's cash collection schedule for the upcoming year 2015, both in quarters and in total for year. Dear friend, dear followers of this Patera TV, this is the suggested answer for this question you read above. Take your questionnaire and we go step by step. So as you see, this is the section of a cash budget which indicate the cash collection schedule for the upcoming year. Upcoming year is the year 2015. So we have details. Details is where the budgeted revenue, where the revenue are going to come from. So we have quarter 1, quarter 2, quarter 3, quarter 4, and budgeted revenue for a year. As you see, this is the answer. The property tax, the budgeted revenue from property tax in quarter 1 is equal to 9 million. Is equal to 9 million. Where this 9 million comes from? So we go to our workings. Here we have working number 1, the cash received from property tax. Cash received from property tax, as you have seen in the additional information. So the opening balance of the property tax would be 2 million, where in our additional information, the examiner stating that the year 2015 year-end receivables include the property tax. These property tax receivables will be the opening balance in the first quarter of 2015. 15 and is equal to 2 millions. Rental tax is equal to Rwandan franc 7 millions and the business license tax is equal to Rwandan franc 5 millions. That's why in our workings in the first quarter we have opening, you have 30% of the previous last quarter opening balance equal to 2 millions. And in this first quarter we have the other additional information. Number 1, which stated that the sector's policy require all taxpayer to pay 70% before the last date ending the last month of the quarter in which taxes are due, and 30% remaining before 15th of the first month of the following quarter, whereas other cash from sector service is collected as services are performed. Burakurako 70% aba taxpayer bagomba kuyishyura ku mpera z'ukwezi kw'iyo kwata umusoro ugomba kwishyurwamo. Bivuze ngo n'ubundi ni muri iyo kwata 70% by'umusoro bateganya muri iyo kwata bigomba kwishyurwa muri iyo quarters. No 30% asigaye akishyurwa ku itariki ya 15 y'ukwezi kwa mbere kwa kwata ikurikiye. Birumvikana ko ari muri kwata ya kabiri. Niyo mpamvu that is why in our workings as you see the budgeted revenue from property tax in the first quarter is 10 million. So we are going to multiply by 70%. The 70% of 10 million is the property tax which will go to be received in the first quarter, and we adding the opening, and we see that the total budgeted revenue from property tax in the first quarter equal to 9 million. Dear friend, in the second quarter also is the same. In our question, the 30% of the previous quarter, of the first quarter, will be the opening balance in the second quarter. So the 30% of 10 million will be opening balance in the quarter 2, and you have seen that the budgeted revenue of property tax in quarter 2 equal to 8 million. Then the 8 million, 70% of the 8 million will be revenue to be received in that quarter, and so on. That is why the total amount of property tax to be collected in second quarter equal to, we take 3 million plus 5,600,000, and we get 8,600,000. That is why in our property tax, we see that the first quarter the revenue from property tax to be received is 9 million. In second quarter is 8,600,000. So the formula, the process is the same for the third and the fourth quarters, and then add up to get the budgeted revenue from a property tax for the year, which will equal to 38,100,000. So we see that rental tax, the budgeted revenue from rental tax for the first quarter also it is 8,400,000, where this 8,400,000 comes from. Go to this working number 2, cash received from rental taxes. So in our addition, you have seen that the account receivable from year 2015 of rental taxes is 7 million. That is 7 million. This 7 million is the opening balance in this quarter. Is the money remaining unreceived for the fourth quarter of 2014, and this amount is to be received in the first quarter of the next year. So this is the 7 million, and you have seen that the budgeted revenue from rental taxes in the first quarter is 2 million. As the additional information say, the 70% of the budgeted revenue of rental taxes is to be received in the current quarter. That is why we take the 2 million multiplied by 70%, and we see that the budgeted revenue which are going to be received in the first quarter is equal to 1,500,000. So the total of the revenue to be received from rental taxes in the first quarter is equal to 80,400,000. That is why in our answer, the total revenue from the rental taxes in the first quarter equal to 8,400,000. So this is how our revenue have been gotten. So let me take another example for cash received from rental taxes. Let me take to the example of the fourth quarters. In the fourth quarters, the opening balance will be the 30% of the amount to be received in third quarters. In the third quarters, the sector have to receive have to budget the 3 million from the rental tax. The 70% of those 3 millions were received in third quarters, but 30% remaining, which will be the opening balance in the quarter 4, is 900,000. So in quarter 4, 900,000 is the opening balance, and the amount of the rental tax to be received in the fourth quarter, as the question says, is 4 million. So those 4 million we are going to multiply by the 70%. The 70% might be received in that current quarters, in quarter 4. That is why we take 4 million times 70%, and we get 2,800,000. So the total revenue from rental taxes received in quarter 4 is equal to 3,700,000. That is why 1,000 That is why in our schedule, in cash collection schedule for rental taxes in the 4 quarters, the total rental tax received is 3,700,000. This is the same like on the recent taxes. So let me take the only see how we see this 13,400,000. So we are going to see on the working number 3. Working number 3, we have cash received from a business license taxes. As additional said, the account receivable in 2015 of business license tax is 5 million. Those 5 million will be to become the opening balance in the first quarter of the 2015. So, and the question saying that the budgeted revenue from the business license tax in the first quarter is 12 million, and the additional information say that the 70% of the budgeted revenue of the revenue will be received in the current quarter, and 30% will be received in the following quarters. That is why, if this is 12 million is received in the budgeted revenue for the first quarter, the 70% of which is to be received in this current quarters. That is why we take 12 million multiplied by 70% and we get 8,400,000. And the total, as you see, the total of the cash received from the business license tax in the first quarter will be equal to 13,400,000. That is appearing in this our cash collection schedule. In our cash collection schedule, we see that in the first quarter, the license tax in the first quarter is equal to 13,400,000. So, and for other quarters, the process is this. So, we are going to deal with the to see how the whole rate, the auditorium whole rate are received. So, as additional information said, the additional information said that the 50% of the hour rate will be received in the quarter the whole is rate out, and the 30% in the following quarters, and the 20% remaining in another quarters. Is this is the the auditorium cash rate is collected in 3 instruments: 50% in a quarter by which the hall is rented out, 30% in the next quarter, and the remaining balance in the second quarter from the quarter by which rent applied. This is additional information we are going to use to search for cash received from the auditorium hall rate. So, but we are going to see the additional information number 4, cash received from sectors auditorium hall rate. So we have detail, we have the quarters, we have the quarters, and the detail. So for our additional information. We have additional information saying that the account receivable of the auditorium hall rate is 10 million, and saying that 10% is to be received in the first quarter, and saying that 7 million is to be received in the first quarter and 3 million to be received in the following quarters. That is why the opening balance of auditorium hall rate will be equal to 7 million, as additional information said. And the additional information is saying that the 50% of the budgeted revenue of the first quarter will be received in that quarter. So the budgeted revenue from whole rate in the first quarter is equal to 7 million. So those 7 million, 50% of which will be received in that quarters. So the total cash received from in the first quarter from whole rate is equal to 10,500,000. We take the opening of the 7 million and we add up 3,500,000. That is why this 10 million and 500,000 is obtained. So the process is the same for other quarters. This is the 10 million and 500 and 500,000. So the additional information is saying that the other sector service will be received in the quarter those services are performed. In our question, as we see, this is the service, the other sector service revenue. So that is what is to be received in a quarter it's performed. That is why in our schedule, in our cash collection schedule, the other service in the first quarter we have 600,000, second quarter 400,000, third quarter 550,000, and in the fourth quarter we have 150,000. So we are going to see how to gain the contribution from a mirror company, as also the sources of revenue of the sector company. So we are going to see how this mirror contribution have been obtained. This is the mirror. This is the mirror contribution. So we go to our working number. Our working number 6. So working number 6. So in year 2015, we have variable cost equal to 109, sales per unit equal to 25%, fixed cost equal to 30%, and additional information saying that in this information have been changes. Those changes is this: sales per unit remain constant to 20%, but the variable cost will be increased by 6, which means that the existing variable cost was 9, but and the variable cost we are going to get is to take 9 plus 6, and you get 50, as a variable cost in the year of 2015. 15. The fixed cost also in the 2015 will increase by 15,000 and equal to 45,000. So what is the margin of safety? The margin of safety. The margin of safety. We are going to search a margin of safety in this question. We are going to search margin of safety in this question in order to multiply the 28% as the mirror contribution to the sectors. So the margin of safety, this is the amount by which sales may decrease before a loss occurs. The amount by which sales may decrease before a loss occurs. So this is a difference between actual level of sales and the break-even point. Remember, dear friend, below the break-even point, the company is in loss, but above the break-even point, the company is in a profit. That is why the margin of safety, this is the amount by which sales may decrease before a loss occurs. Contribution margin ratio. What is the contribution margin ratio? So the contribution margin of ratio is the proportion of sales available to cover fixed costs and provide a profit, calculated by dividing the contribution margin by the sales revenue, also known as profit volume ratio. The contribution margin ratio is also called profit volume ratio. Means that the profit volume ratio also is the proportion of sales available to cover fixed costs and provide a profit. Tuvuga hano urugero, nimba sales per unit ari kangahe, ari 25, tuzi ko mu byo tugurishije muri sales harimo sales ibigizwe na fixed cost, igizwe na variable cost, kandi igizwe na profit washyizeho, naga profit wongeyeho. Nicyo kintu kiba kigize sales. Ingi contribution margin ratio ni purusa kuri iyo sales. Twavuga ngo nimba sales per unit ari 25%, ese muri aya 25 na yahe muri yo agizwe na fixed cost akagirwa na profit? Ako gace ku ijana niko twita contribution margin ratio cyangwa se profit volume ratios. So contribution margin per unit, contribution per unit, we take sales per unit and deduct variable cost per unit. So in the year 2015, contribution margin per unit will be equal to 16 1 from 20% sales price minus variable cost, which is equal to 9 1 And the contribution margin ratio, as you see, we take a contribution per unit and we divide the sales per unit times 100, which will be the contribution margin ratio or profit volume ratio will be 64% in 2014. In 2015, where changes take place, the contribution per unit will be 10 1 So in the year 2015, the contribution margin ratio or profit volume ratio will be equal to 40%. So the break-even point in sales value can be calculated as follows. So we take fixed cost times the break-even point in sales value will be equal to fixed cost over profit volume ratio over contribution margin ratio. So in year 2015, the break-even point sales will be equal to 30,000 over 6,400, and the break-even point in sales will be equal to Rwandan franc 46,875. This is the break-even point in sales for the year 2015. So in the year 2015, the break-even point will be equal to 112,500 Rwandan franc, where we take the 45,000 as fixed cost and we divide it by the profit volume ratio, which is 40%. So as I said above, the margin of a surfeit equal to actual sales level minus break-even point in sales values. So this is our table showing the calculation of the margin of a surfeit and 28% as a contribution of MENA in the sector revenues. So we have the fourth quarter of the year 2014. So in the first quarter of the year 2015 until the fourth quarter of the year 2015 and the year in the total. So in our question says that the unit sold in the fourth quarter of 2015 is equal to 9,500. So, and this is also the unit examined given in the question, saying that the mirror company is budgeted to sell this unity in these quarters. So the sales per unit both in 2014 and 2015 is never changed, is 25. So take sales price and multiply by unit price and we get the actual sales. So we have seen break-even point sales. Break-even point sales in the 2014 years equal to 46,875. So but in the year 2015 the break-even point also equal to 112,500. This is the break-even point. So the margin over surface, say that the margin over surface, we take actual sales minus break-even sales level. So the margin over surface in the fourth quarter of 2015 will be equal to 190,625. So this is the margin of safety for the various quarters. We take actual sales minus break-even point sales levels. So the contribution, as the examiner, as in the question, saying that the contribution will be the 28% of the margin of surface. And additional information saying that those 28% will be deposited. This is additional information. With the amount will be deposited on the sector bank account, on the sector's account, on the first date of the quarter following the quarter of sales, include 1st January 2015. Means that the sales this contribution of fourth quarter of 2015 will be deposited on the sector account in the first quarter, and this contribution of the first quarter will be deposited on the sector account in the second quarters. That is why in our schedule, our cash collection schedule, this is the minimum contribution. This 53,375 is the contribution from the fourth quarters of the last year 2014 and is received in the first quarter of the 2015, and this is the contribution of the sales of the first quarter, which will be to be received in the next quarters. So this is how we do our question to get the total contribution for the quarter. We add up to get the total contribution for each quarters. We add up this column and we get this. But to get the budgeted revenue for the year, we add up also this. So dear friend, dear followers of this Patera TV, thank you for watching this video, but remember to subscribe if you have not subscribed on this Patera TV. Thank you for watching. In the last session, we are going to deal with another cash budget question. This is a complicated cash budget question. We are going to do it in the next question. Stay in touch. Don't leave without your comment. Share to other group. Like. God bless you.